Hi, this is Tony Pericelli with another tax tip on Main Street. I'm actually just off of Main Street this morning at the beautiful Hotel Trundle, an award-winning boutique hotel here in Columbia, South Carolina. And the reason I'm here is to talk about improvements to your business property. So if you're running a business such as a hotel or any type of business, even manufacturing or any type of business that needs equipment or buildings, then at some point you're going to have to spend some money to either replace equipment or maybe do some improvements to the property in which you're running your business. Well, in the new tax law in 2017, something called Section 179 was enhanced so that that can be a much better use to your business and provide better cash flow for tax purposes for your business. Now, under the old rules, Section 179 only allowed you to immediately deduct equipment that you might have purchased for your business. But under the new rules, Section 179 allows you to deduct things like improvements to your property. So that goes as far as interior improvements, changes to your HVAC system, your security system, and your fire suppression system, as well as even the roof of the building. So the reason this is really advantageous for business owners is because under normal depreciation, you might buy equipment or do improvements and have to deduct that over several years, anywhere from 5 to potentially even 39 years to take that deduction. Under the new rules, the Section 179 rules allows you to take that deduction in just 1 year, immediately in the first year that you purchase the equipment or you do the improvement. So if you think through that, let's say you spend $100,000 to do improvements to the interior of your building, as well as maybe to put a new roof on the building or to buy some equipment for your property. Under the old rules, you might get, say, 20, 30, or 40% of that in the first year as a deduction. But under the new rules in Section 179, you'd get that full $100,000 in the very first year as a total deduction. That could reduce your taxes anywhere from $20 to $30, maybe even $40,000 for that 1 year. So that's a really good way to improve your cash flow. Now, there are some limits on this, and if your business has additional equipment of more than $2.5 million in 1 year, you will begin to phase out and you might not be eligible for this. And the limit on the Section 179 deduction is $1 million any 1 year. So if you're putting a lot of equipment or a lot of new improvements in place, more than $2.5 million, you might not qualify. But for small businesses that put, say, $100,000 or $1 million or even $2 million into service in the first year, in 1 year, then it's going to be a very good possible deduction. It's going to really improve your cash flow. So give us a call or talk to us anytime about this new deduction and how you can use it for your business. This is Tony Pericelli with another tax tip on Main.